I believe Deepseek is real, and I believe that it implies a movement it forces the application of AI for value and takes away the easier sort of pathway of, just buy the picks and shovels and don't worry about the gold. Now you have to find the gold because the cost of picks and shovels just went down 90% for artificial intelligence. That's my theory. And I also think it's actually really good for biotech and all these. I mean, there's all these places theoretically where lower cost AI is really helpful to R&D. But I do think these big tech names are going to get kicked around a little bit. Well, some of them, not all of them.
Other than the big tech names getting kicked around a little bit, who would actually not benefit from lower AI costs? I mean,
exactly.
It's the most ridiculous thing in the world. I mean, do you really think that anybody's going to lose any sleep for Microsoft, Nvidia, or Apple or somebody else? Not, oh my God,
or Tesla,
or Tesla. I mean, oh my God, poor $3.5 trillion company. Can't rape, pillage, and steal. I mean,
exactly.
Who's going to be mad about that on any level?
Well, when this happened, because you and I I'm thinking back to years ago, talking about the tech monopolies, and we've had debates about the role of the government and the role of antitrust, and should antitrust break up the monopolies, and on and on and on. And I'm more inclined, obviously, to think that there should be government enforcement, breaking up monopolies, and you've always been pretty consistent in saying, listen, let the market will fix it, kind of a thing.
Yeah, sure.
And so, so what I sort of was observing with Deepseek, which then also made me think about TikTok, was because the criticism of the monopolies is you get worse and worse product at a higher and higher price.
Sure. Isn't this one of the greatest examples you've ever seen?
No, that's what I thought of, Tom. Honestly, I was like, maybe Sosnoff was right, because both on the algorithm. Who came up with the best algorithm? It wasn't Twitter. It wasn't Facebook. Of course. It wasn't Instagram. It was TikTok. Smoked them all because they're all sitting there fat and happy. They think they're because they're in their walled gardens and their monopoly. So they get smoked on TikTok on the algorithm side, and they just got smoked on artificial intelligence. It makes you wonder why we are. I mean, I guess it's like one of those, because it brings up another thing, which is long ago it was apparent to me that having a lot of money is not necessarily correlated to being intelligent. that having a lot of money, intelligent people may have a lot of money, but because you have a lot of money is not any evidence of intelligence. Or even for that matter, grand innovative competence. Sometimes this grand innovative competence is reflected as a result of money.
Of course.
But people who have a lot of money are not necessarily grandly innovative or competent. They may be owners of monopoly technology companies that are increasingly less innovative. I mean, I'm being a little bit extreme with this as a premise. But you see where I'm going, which is, is this an example of the market solving for the monopoly, would be the simple question.
And the answer is yes, it is. In fact, it has long been my contention, going way back, like you said, way before this discussion.
I remember
today.
this 6-7 years ago we had this conversation.
And I have long argued that you cannot mess. It's the old don't mess with Mother Nature. And eventually, if you try to legislate out or you try to restrict competition through monopolistic policy, you effectively
meaning antitrust. You mean antitrust?
Meaning antitrust policy, right? By breaking them up and or not allowing them to take over another company, do whatever.
Restriction, any sort of restriction.
Anything that messes with the free market. What you're doing is actually it's a disservice to eventual innovation, creativity, costs, and everything else. What you saw with Deepseek is a perfect example of just let the market disrupt itself. There are always disruptors. If there is an opportunity, there'll be a disruption. It's almost impossible for there not to be a disruption where there's an opportunity. And the reason for that is because there's too much capital out there available that's seeking returns. And because of that, There is, again, anywhere where there's opportunity, somebody will figure out how to disrupt that marketplace. Now, some people will fail. Lots of people will fail, and a few people will succeed. And in the process of that happening, just like what happened with TikTok, which came on the scene 10 years later, or what happened with Deepseek, the market got disrupted. And in some cases, it's fairly dramatic. With Deepseek, it's dramatic. And I think it's great to see, because it really throws efficient market theory. It really throws free market enterprise right back into the thick of things, and says, you know what? This is such a better way to handle it.
So I believe that you are, I won't say that you're catastrophically and categorically wrong.
Okay.
But I will say that I think you are wrong-ish, and I'm going to tell you why.
Okay.
Because I agree with you, but so first of all, you talk about let the free market run its course, and then ultimately, if you wait long enough, it'll correct itself.
And when there's more money and more technology available, and you can do things cheaper today than you could do things 25 years ago, that it's a much more level playing field today than it ever was.
Sure. The risk multiple risks, but the free market is not the monopoly is the definition of the stranglehold on a free market.
Okay.
It's the same reason people don't want a centralized government. The reason people don't want, government grocery stores or whatever is because then it's a monopoly, right? And so whether it's a private monopoly like the one we've lived under in technology for the last 10 years, let's say, or government monopoly, both those monopolies are lower service, higher cost, weaker product, blah, blah, blah. That the free market is based on multiple actors, multiple parties competing to improve the service to create better service at lower costs, more accessible, as opposed to worse service at higher costs with less accessibility. It's why everybody hates the cable company. It's why everybody hates the telephone company. It's why all these tech robber barons, whether it's Elon Musk or Mark Zuckerberg or whoever, are probably among the most unpopular human beings alive on the earth today. The consequence of waiting for the free market to correct itself is that you empower people with delusions of grandeur, which then leads to all sorts of political consequences in terms of their behavior and the excess influence that those individuals take in society based on the delusional belief that they are superior to other people because they have the money from their monopoly. But this is a universal problem with all this. The other thing is capitalism and free markets, in my opinion, always ends with a monopoly somewhere. It starts with a bunch of players and then eventually end up with 1, 2, or 3 players. And you need a system to break that up, which may well be your system, which is just flood the market with money and technology, reduce the cost of innovation, and even the biggest, baddest, OpenAI, 500 million, Nvidia, whatever, the biggest one, or Meta, Facebook, Instagram, whatever, with TikTok, eventually it'll get wiped out. I guess my question is why do we have to wait that long? Like, if we know it's a monopoly and we have antitrust law, and we have a Federal Trade Commission, why shouldn't we demand that the regulatory authorities, the same way we would demand the regulatory authorities enforce, we don't want blue sky, we don't want fraudulent securities, we don't want insider trading, we want integrity in the markets, so we want to have these lists of enforcements to maintain the integrity in the markets. Don't we want integrity in the free market, and isn't part of it, isn't allowing the monopolies to engorge themselves for a decade, creating these idiots? Isn't that a higher price than we should have to pay waiting for TikTok or Deepseek to humble them?
I don't think
shouldn't the regulators get there sooner?
I wish it was that easy. I'd love for you to tell me what's a monopoly. Like you're using hindsight. You're looking backwards to give an historical perspective that's not really that easy to do in real time. And in real time, I don't think it's that easy.
Everybody knows that Facebook or that these tech companies
really did everyone when Apple was a $500 billion company, did you know it was going to be 3.5 trillion? I don't think so. And I don't think
But
that.
but it's been, these companies have been in the trillions for years. Anyway, I understand where, I see where you're
But
going.
are we a better society because Apple, Amazon, Nvidia, Microsoft have done what they've done? Are we a better company because we let them do their thing? Are we a better world because we let them do their thing? Or are we worse off because we let them do their thing? I'm going to argue that everybody is, when I say everybody, I mean that the essentially the public marketplace is a better world because we let these huge companies continue to grow and innovate and do their thing. If we had broken them up, we would have ended up with a lot of AT&Ts. I mean, can you think of a situation?
Then I would say, if that's the case, why is income inequality at an all-time high? Like,
Well,
why is it the greatest concentration of wealth in the history of the world?
Yeah,
why did Luigi feel compelled to murder the CEO? I mean, there's a level of alienation in the society.
Let's not compare. Don't take some insane.
But I'm just saying, when you have concentrated wealth and this level of disparity,
I understand.
It creates alienation.
I understand, but don't compare some crazy some homicidal nutcase to that. Like, don't try to rationalize that. Let's talk about.
I'm just saying it's evidence of extreme alienation in society,
okay.
And everybody. There's a reason. I won't talk about Luigi, but I'll say there's a reason millions of people support him.
There is extreme,
and it's the alienation.
We have created circumstances of extreme concentrations of wealth, which have gone beyond ridiculous. Like, I think I heard Bernie Sanders give a lecture on this once, where he said, "You know what? Nobody really needs $1 billion." And I think he was just kind of, playing around with just as a discussion topic, but his points were well taken. I mean, he really articulated it nicely. You're right. Do we need the world's first trillionaire? Do we need somebody to have a few $100 billion?
But it's not even about that. It's if the cost of allowing the world's first trillionaire is catastrophic absence of resource. It's like if the world's first trillionaire also was creating abundant resources for everybody else, which in theory is what capitalism was supposed to do.
That's what they'll argue. That's what they'll argue they're doing.
But the statistics would betray that statement, obviously.
Well, my argument would be, if you fix the tax code, you fix these problems. Like, I think that this is a tax code issue, and it is not an issue. You don't want to put a fence around somebody because they're uber successful or because they've created some incredible stuff. You don't want to basically put a upper limit on capitalism. I don't think that's fair either. But
monopoly is not capitalism. A monopoly is you're a prisoner. You have no other choice. I'm your cable company. I control your Wi-Fi.
Here's the whole thing. We're not talking about cable companies. I mean, I know,
but I'm saying capitalism and monopolies are not the same thing.
I understand, but is Amazon a monopoly? I mean, is Apple a monopoly? Is Nvidia a monopoly? I'm not so sure that those are the same thing as your cable company. All right. And I'm not so sure those are the same thing. And I think if you fix the tax code, you fix a lot of this. I'm not saying it's easy. Okay. Don't get me wrong. It's not easy at all. But I'm not so sure.
You'd rather see it in the tax code than with the antitrust.
I do, because I think antitrust is anti-competitive. And if I want companies, like, I'm going to benefit more as a entrepreneur, as a business person, from Deepseek lowering costs of AI than I am from breaking up Amazon, okay, or from breaking up some other AI company like Nvidia or something like that,
or Meta.
I would rather see competition in the marketplace than breaking up those companies, because the rest of us are all going to benefit more. Nobody benefits from just shutting somebody down. We benefit from somehow making the playing field more fair. So how do you make the playing field more fair? You bring disruptors onto the scene, and with the other people where there's all this wealth inequality, you get the taxes right. That's the part.
But what does that mean? Get the taxes right? Does that mean
That
tariffs
means-
and abolish the income tax and tariff China?
No,
like
that does
Mr.
not.
Trump is suggesting.
No, that is ridiculous. That is moronic. What that means is that Warren Buffett, Jeff Bezos, and Zuckerberg, and that whole gang, okay, should not be taxed at a lower tax rate than Dylan Ratigan, nor should their companies. Period. That's what that means. And if you get that fair and everybody pays their fair share, then you've solved most of the problems. Because then nobody can complain.
How?
Because it is not fair when Warren Buffett pays less in taxes than I pay.
No, I get it, but
if Warren Buffett pays more in taxes than somebody, if Warren Buffett makes $1 billion a year and pays significantly more in taxes as a rate than somebody who makes $50,000 a year, then the person who makes $50,000 a year cannot be upset that Warren Buffett made $1 billion, because you know what? Whatever he did to make that, he earned that. But he paid his fair share.
Did he or did he bribe the politicians to protect a monopoly that allowed him to do that? Is Elon Musk?
You have to assume.
I mean, your
hold on.
people are not paying off the politicians.
There's a difference.
And all this.
This is not Russia. Okay, this is not China. We're talking about the underlying assumption is always that the marketplace has to be fair. If we're talking about a corrupt marketplace, if we're talking about a marketplace that is corrupt, then everything goes out the window, because then you are just the Soviet Union. Then you are China. Then you are some other place somewhere in the world where nothing works. Okay. But in the US, we have to believe in the system. That's the scariest piece about this administration. Can they be bought? And the answer so far is yes. And that's what scares everybody. It's not the policy. It's the fact that they can be bought. And once the integrity of the system is gone, we're in huge trouble. That is the whole problem. Like, people don't get that with Trump and the whole administration. The issue is if they're for sale, which obviously they were with crypto, which obviously they were with TikTok, which obviously they are in lots of other things with Musk. So when you consider Musk, you consider TikTok, you consider crypto, all those things were for sale. For a few $100 million, you get what you want.
Anything you want.
Now, that's the scary part, because as soon as the integrity of the system is gone, then everything falls apart. And that's the danger. The danger of Trump was never what his policies were, because this country always survives policy. Okay, period. We survive policy. The system's too big to let anybody dictate policy that's going to take down this country. It just doesn't happen. The only thing that this country cannot survive is the integrity. We have to maintain the integrity of who we are, of what capitalism is, of what our democracy is. That integrity must stay in place. Then the system works. Then you just fix the tax code and everything will be fine.
And you're saying, and the reason you think the tax code is the essential solution is because you're saying then the alienation of the haves and have-nots is less.
Because then somebody can look and say, you know what? Then Warren Buffett turns around and says, you know what? I made $1 billion, but I paid $600 million in taxes this year. And the guy that made $50,000, that paid $1,300 in taxes, goes, okay, that's fair. You paid $600 million, I paid $1,300, that's fair. But the guy that pays $1,300, and then he turns around and he sees a guy like Trump who makes $1 billion, pays zero, he goes, this is bullshit. System's all fucked up, and we've got to make this right. That's the biggest issue we have. So,
and you think that, okay, go ahead.
So Bezos and it's not just Bezos himself, it's also Amazon. Amazon can't go on for 15 years without paying any corporate taxes. And Bezos has to pay some taxes. And Buffett has to pay taxes. And all those guys have to pay taxes. And their companies have to pay taxes. And they can't go hide it everywhere. And it starts at the top. Trump has to pay taxes. And that's how the system works. And when everybody is treated fairly, then everybody on down the line, it works.
because then you're saying the engagement and trust in the system it returns. But I want to go back to the Deepseek TikTok example of the tech monopolies getting an end around from basically superior innovators.
Yes.
In this case, in China. And, because the theory of antitrust is, and I don't mean, I'm not to harp on it, but the theory of antitrust is if you create more competition and prevent one behemoth from choking everybody out, you get more innovation, more creativity, more product. You're saying let them try to choke the market out. It doesn't matter as much as it used to because the cost of entry is so much lower.
Yeah.
Meaning like that because the technology is made. It's not like I have to build another railroad. Or it's not like I have to get control of oil wells like Rockefeller. I can basically force my way into a semi-monopoly or monopoly market with the low cost of entry and technology. Is your argument? That's what TikTok and DeepSeek represent?
Yes, of course. Of course, yes, 100%.
Is this a come to Jesus for Silicon Valley?
I hope so.
And in the sense of their culture, their arrogance, their whole like the VC from VC on down.
Well, it's a little.
Have they been embarrassed? I guess.
I don't think so. It's a little more complex than that. Here's an example I gave to a buddy of mine. We were talking about this yesterday. There's a group of young kids that I've been involved with for a few years that built a high frequency network, for trading. And they built it all through college. Okay. They started when they were freshmen in college and they built it all the way till they were, a year out of college. So 5 years worth of labor, 5 years, and built a system comparable to like one of the best high frequency systems like that like Citadel would build, just as an example. Not quite that, but something, along those lines. If you were to go out and build that, and you were Citadel and to go out and build that, it would cost you $25 million, at least, maybe 50. These kids built it on their backs, just putting every day and night into it for 5 years. They didn't pay themselves any money, so it cost them less than a few $100,000 to build. So if they came out right now and say, listen, we built everything Citadel has for a few $100,000, and it cost them $50 million. That's another example. But it's not, like if I went out tomorrow, let's just as an example, built another brokerage firm, it would cost us $25 to $50 million because that's what the cost would be for me to go out and build a brokerage firm tomorrow.
You're saying to hire the lawyers, to get through the regulators, to pay the programmers, to get a building, whatever.
Because you reach a certain level of either success or, experience and everything else. That's probably the minimum cost, somewhere between 25 and 50 million. If somebody else wanted to start from scratch tomorrow, they could probably do it for 5 or 10 million. How's that possible? Well, it's going to cost me, 5 to 10 times that much. But that's the way it is. So I don't blame Silicon Valley's more expensive. It's going to cost them a lot of money to build things. They've reached a certain level of success where things are just more expensive for them. They're not a startup. Can't ask Nvidia to go out there and, build something. At this Deepseek, I'm guessing it's a bunch of scientists. They put their blood, sweat, and tears into it and scraped it all together, from their existing, built stuff in an unheated garage type thing and built this up. And so the argument that, hey, this only costs 6 million or 16 million or 16 million, whatever it is, if it was built in Silicon Valley, it would have cost 600 million. So it's not really fair to say, oh, you can build this for $6 million. But they did. But it's not something that's actually repeatable. But the key is that it didn't cost 60 billion. Like Tesla's, I'm not Tesla, Facebook, Meta, Zuckerberg said, well, we put 60 billion into AI. Okay, congratulations, 60 billion. I mean, there's no question that you can do a lot with 500 or 600 million. That's the whole point here. Maybe it's not 5 or 6 million. Maybe it's 5 or 600 million, but it's not 60 billion, which means that firms all over, it means to firms like us, you know what? We can commit $5 million or $10 million to AI, and we can probably end up with something really cool, which we're comfortable doing. We can't commit 100 to 500 million. We don't have it. but 5 to 10 million, we could do that.
Mm-hmm.
That gives us confidence.
The best thing that I see, not to jump around too much, is that I think we were saying right at the top of the show here, who loses to cheaper, better, faster AI? Nobody.
Nobody loses.
Right?
I mean,
the medical industry wins.
Nvidia
materials,
loses.
Mechanical engineering, civil engineering, electrical engineering, medical, materials, science. Everybody wins to cheaper AI.
I mean, maybe Nvidia loses because they can't sell.
Exactly.
But I mean, it's a $3.5 trillion company. Are you not going to lose any sleep for Nvidia?
But Nvidia is, because everybody loves to, Nvidia is one of all of our favorite stocks to look at for all the obvious reasons over the last few years. Is this a meaning? Do you have an opinion on how significant a moment this is relative to the valuation of whether it's Nvidia or, for that matter, the AI implication inside of a Microsoft? Like, do you view this as a bell ringing at the top? Would you,
I think it is.
How confident are you in this situation?
It's a surprise. It is a bell ringing at the top, and it is a bit of a surprise. And there's always a surprise, which triggers an event like a sell-off in Nvidia, something like that. Nvidia today is, down $8, but it was up $8 yesterday. So let's not,
right. But it was also, but 2 of the last 3 days now, it's a legitimate sell,
But the other thing with this is that does this basically bring AI into, ultimately, if you make hamburgers a little bit cheaper, do more people eat hamburgers? And if you bring AI into the spotlight, is it really, in the long run, is it more positive? And I think the answer is probably yes, long term. Short term, I think it puts a lot of pressure on a company like Nvidia because they have to kind of go out now and reinvent themselves. They had a monopoly. You remember they had 80% market share on the hardware side and on the software side. Now they've got to do a little work. But listen, again, from a consumer perspective, because that's all we should care about is ourselves. We're not worrying about Nvidia. We're worrying about our own companies, our own consumer, the consumer in us, the clients we have. Everybody benefits. If AI is cheaper, we can do more stuff. If the agents that we create and the agents that we use, if we can go to more places because the market has been commoditized, then the information that AI spits out is that much better. You don't want to go just to Deepseek. You don't want to go just to ChatGPT or to OpenAI, whatever it is. You want to go to as many places as possible. And essentially, it's just like routing an order. You don't want to go to one high frequency firm. You want to get the best market from 5 high frequency firms. AI is the same thing. We're going to have 5 different firms out there now instead of 1, all competing for that one request for information in a microsecond. How does anybody not benefit from that?
The only people that don't benefit is the monopolies that are planning to charge 100 times more for the service.
But that's not true. But that's not true.
That the price that they were planning on gouging everybody for access to the AI.
You see,
and now their little gouging strategy has been taken off the table, good sir.
No, that is short-sighted, and I'll tell you why. Because they used to use that same argument in the financial markets. If you make everything cheaper, like you make tighter markets and you make the cost of trading cheaper, then there'll be no competition. So what will end up happening is the high frequency firms will make so much less money that they'll make worse markets. Well, actually, it was the exact opposite. And the more high frequency firms that came into the marketplace and the tighter the markets came, the business exploded because more people use the product. So what's going to happen here is the more people are going to use the product, it's going to become less expensive, but the scale at which it's going to grow is going to be it's going to have some kind of exponential growth that it wouldn't have had before because the cost.
And I'm getting all that. I'm just wondering if basically the NASDAQ is vulnerable because it's been so dependent on the Nvidia, Microsoft spiel.
Yeah.
And also how will this, because you have this net effect of more AI good for everybody. It should be good for the S&P 500, every company in the S&P 500, Pepsi, whatever, every company. It's uniquely bad for a small group of tech companies. But the small group of tech companies for whom it's uniquely bad have been the leadership in a stock market that was up 25% for 2 consecutive years.
Yeah, that's not a bad thing. That's a good thing for everybody else. That's a good thing.
But can the stock market, my point is, can we lose this leadership and have the stock market still maintain its health?
Of course.
No problem.
Of course. Of course. You know, just because you got a new Lion King doesn't mean, like, you know, the pride's
not still a kingdom.
Yeah, there's not still a kingdom. Exactly. You know, I mean, you got to keep rotating at the top. It's healthy.
Are you trading it? Has it affected have you changed your point of view on an Nvidia short position or a Microsoft short position?
No.
Like, has it affected your sentiment?
No. It cost me some money on, let's say, Wednesday, on Monday, because I got caught in 1 or 2 stocks with, like, just short some premium, but I wasn't playing them long or short. I just got caught short.
Yeah, just vol expansion.
Yeah, vol expansion. But no, it has not. It has not had any impact on me personally yet. So yeah, not yet.
But as you haven't changed up your point of view any which way relative to the recent events.
No, I'm happy about it, because we are a buyer of, you know, we spend a lot of money on AI engines, and, you know, we write to multiple APIs to support all the AI infrastructure we've been building now for the last year. And it can be very expensive in some cases, and we don't charge for it, so we give it away. And because of that, you know, if the prices come down because there are more alternatives and it's a more competitive marketplace and it gets more commoditized, then it's going to benefit us and it's going to benefit our customers. So I don't see how any of this is negative at all, any of it.
I bring this up only momentarily, and not to switch the subject on us, but just because it's in the recent past, meaning 30 odd minutes ago, the no change from the Fed of no consequence, I would presume. Do you think that there's a Powell Trump? I mean, I would suggest, based on Trump's recent behavior as the president, that there is going to be a Trump Powell showdown at some point in this presidency, probably sooner than later, and that Trump will fire Powell if he can.
Well, in order for Trump's policies to work, he's going to need lower interest rates. His everything that he's campaigned around with respect to inflation and with respect to prices and costs and all those other things, everything requires lower interest rates, because lower interest rates is the validation that his policies are working. Now, the advantage that Trump has is that he came into a situation where the rates were relatively high. So he gets to come in at a very good point, because he can be a winner here with very little, you know, he doesn't have to do that much and he can win on the rate side. But he's going to get frustrated very quickly if rates continue to go, you know, they're just off their, you know, they're just on their bottom right now. They're not on their lows, but the rates are on their highs. The prices are on their lows as far as bonds go. And this number today did not help his case. Bonds are down about 0.5 point right now. Let's see. Yeah, bonds are down about just under 0.5 point. So it didn't help. The Fed move today, or whatever they said, didn't help the case. I think that Trump has bigger fish to fry than Jay Powell. And I don't think Jay Powell, views Jay Powell as a, you know, he thinks the change, I think he believes that the change might, you know, he might get somebody friendlier to him. But I think that he recognizes that Jay Powell is well respected by the markets, and he runs the risk of upsetting the markets. The markets won't take too kindly to a change in Fed leadership unless you have a real reason to change Fed leadership. And I think that's where he's going to struggle with. That's a tough decision for him. You know, the street likes Jay Powell. We're at record highs. And so I think that's a challenging move for him to try to replace him just to force interest rates lower. That's a very dangerous step. And I don't think he needs to do that. He's got a lot of other problems first.
I don't see how the Trump policies, not to go on, I don't want to get into a meaningful Trump conversation.
Yeah, I'm not even talking about it. I don't
basically no interest, but I don't see how his policies aren't hugely inflationary at this point.
Well, everybody says the same thing, but we'll see. I mean, the advantage that Trump has is that that rates are probably going to go lower, and inflation is probably going to come down just naturally because that's where we are in the cycle. So he's got that much going for him. But, the tariff policy is inflationary.
Yeah. Right. Did it have to be China that did Deepseek and TikTok? Could that have come out of a garage in Wisconsin? Could that have come out of a garage in Italy, where I am? Could that have come out of a garage in India?
Probably not.
Is China unique?
China is fairly unique right now. I mean, if you had told me that, if you had said to me 10 years ago.
You don't think it could have come out of Wisconsin or upstate New York or rural Alabama?
No. I think it could have come from Russia a few years ago, maybe 10 years ago. I think Russia's lost all their talent. I think the disaster that Putin has turned Russia into hasn't even begun to show yet. In other words, in terms of the brain drain, the cultural and intellectual catastrophe. The brain drain from Russia, just the dev firms that we use, 1,400 of the best fintech developers in the world are no longer in Russia. They've all moved out. As of 2022, basically. As of 2022, 2023, they're all over the world now. There are not one person's left in Russia. It's absolutely amazing, the brain drain. That's just one firm that we use. There's 1 million firms. They're all gone. They're all over the world. They're everywhere but in Russia. So Russia's dead forever. India's got other issues, which I would have normally thought that India might have pulled this off, but they seem to be, there's a lot of other dev issues in India that have slowed down dev process, which we can get into on another discussion. And I think the one place where the level of competition and the available technology, along with the motivation to get it done, is China. And I think that, and listen, what's
the missing piece in a garage in Wisconsin?
Harvard. Like all these guys are, everybody went to Harvard or Princeton or, these are, everybody studied at the best universities in the U.S.
You're saying in China, they all went to these universities?
Yes. These are all.
So you're saying they're the best of China from the best universities in America with the highest levels of motivation and the highest levels of potential incentive.
These are the most brilliant kids in China that all studied at U.S. universities because they deserve to, because U.S. universities, they basically pay the bills based on Chinese brilliant kids. That's it. I mean, that's how the bills get paid.
Pay full ticket price.
They pay full boat. And so if you look at these universities, I mean, they're stacked with genius kids from China, and they learn at American universities. They understand free markets, they get capitalism, they figured out this whole thing, and they go back and they build it in an environment where they're fairly protected. And the system, we're the enablers. So we've enabled this kind of, innovation, this kind of growth.
So what you say is true. I'm just for the purposes of the argument.
I mean, look at the MBA programs in America. They are financed. They've got to be, in some cases.
But if only China can pull this off, is China basically going to, or is this all China basically moving to dominance at the end of the day?
No, because China's missing one thing. There's one thing missing in China. There's actually two things. One is a totally dysfunctional government that's incompetent when it comes to innovation and understanding how free markets work. That's one thing. And the other thing is lack of capital, because everybody's been burnt. And so there is no capital available. So the problem is that their growth is stymied because of lack of capital, and they just ultimately, they don't really have the market structure to pull this off because they can't raise capital.